Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, last week the Australian dollar recovered close to a full 1 cent after rebounding from the support region of 75.25.35 with the low recorded at 31. Now, last week, the RBA Governor Phil Lowe gave a speech earlier in the week saying that the next move in interest rates would be up, although he did not indicate that it would be soon. It is my view, though, in the next 6 months, we could start seeing the Australian dollar start being teased with the outlook that we could be talking more hawkish. So we have to remain and see how the weeks progress. In the short term, though, the resistance at the moment is holding at 76.35. And I still feel that we could see a break above that level, but give us opportunity to sell into the rally of 76.80.90 as a cap. Overall, I feel the market will eventually reject either 35 or from 80.90 and look back towards the minor support at 75 and firmer from the recent low of last week of 75.25.35. Well, it's no surprise really that the fact that the US dollar weakened further after the Thanksgiving holiday period. What initiated it was the dovishness in the FOMC minutes that was released last week. And the US dollar now has plummeted to a low of 92.59, right in front of that support at 92.55. Now, if we see a break beneath there, that would give further exposure for at least another 100 points to 91.50.70 and reassess from there. But measuring the quality of the indicators, we are from the RSI overbought. So we could see a short-term pullback first, but overall resistance may be cleared at 119.55 and we could see the challenge up towards 120.10.35 this week. So do be on your guard if you're looking to shorten the market, to be a little bit patient as you could get the highs around the 120 level. The dollar-yen case is still questionable in terms of how far the market can fall. At this present, until we get a break above 111.65.80, then I do expect to see further weakness, with the immediate target seen at 110.80.90. However, if we do get a break above 111.65.80, then this could reinstate the bullish case up towards the region of 112.75.85 and reassess from there. But the longer this is capped, then the downside target could be holding towards the 109.5 region. Well, the pound attempted to take the top side out on Friday at 133.59 high, but rejected it rather sharply. And now trading at 133.24 does question whether the market can continue. You can see from a technical point that it is breaking down. Therefore, I do expect to see further weakness, but we would need to break beneath this level of 132.60 to get further coverage to the downside and bring in a target around 131.30. My view on gold still remains bullish, and I still expect to see further attempts towards 94 and up towards 97.99, last week's rejection point. The demand holding it from 84, and as long as we maintain above 79.81, then I hold my bullish view. Looking at the weekly chart for oil, I'm a little bit concerned still with the fact that we are extremely overbought. Although the market still persists to the upside, and mainly on the fact that crude found demand after the shutdown at the North American's Keystone Pipeline. The disruption to the Keystone Pipeline connecting to Canada's oil sands to US refineries has reduced to the 590,000 barrels per day flow. Overall, as I mentioned, I'm a little bit concerned at this topside target. Now, although I'm calling 62, I'm looking to short this market very soon because I feel we're going to get a bit of a correction due to the overbought implications. So do keep an eye on that if you are looking to shorten it. Resistance comes in now 61.10.20 or 62 as a cap that you can see back here that served very well in mid-2015. So that wraps up today. Thank you very much for joining me, and I hope you have a wonderful start to the new week.